Good morning, everyone. Today is Thursday. It is April the 4th, one day before the jobs number coming. We continue to see this damp action underneath. Low participation to the upside as we walk through this elevator shaft. This is the reason that I've shifted to these daily formations because I think they give you a better understanding. Certainly, they give me a better understanding of what's going to happen. We did come right into our blog target at 28.89 and a quarter. It went right up into that area and stalled out. Now we're sitting right here in this congestion zone. So a couple of things could happen. We could have a blow off top that could push um, maybe sellers piling on top here could push them out of the way to the upside. And then we have a jobs number that may or may not move us, probably likely not to move us, even if it's a good job number. There are a lot of reasons that I'm thinking that, but let's just take a look at what we've got going on. So today, 2873, 2875, that's going to be the bounce zone. It was the same bounce zone yesterday. It's starting out to be the same bounce zone today. We've got problems right at 2882, 2883. We can't seem to get over there. But notice this formation looks a little bit like this formation. So we might have ourselves another very quiet day today um, as we wait for the numbers. Our momentum is flat but bullish, trend bullish. That tells us our pullback action is going to meet value buyers who are trading traditional technical upside mechanics, pullbacks or buy zones. That's just the way it goes. Breakouts, listen, you could have said, hey, I'm going to take the breakout at 2860. That's perfectly fine if you've got, an 80-point stop. And that's really unreasonable, particularly if you're an active trader in the market. Okay, an active trader does not need to expose themselves to that kind of risk. This is the same thing here. You want to trade the highest probability event that's going to be in the direction of trend at the baseline of support. It is not going to be in the direction of trend at the breakout level. It just simply is not. The trend will move up, pull you back into support, and press you forward. If you go, well, my support should have been the moving average, that's fine and dandy. Really, the support is going to be the next time you see aggressive buying. And that's going to come when old resistance has become new support. You get tested for a new high and it comes back and it retests again. That's the same sort of mechanic. Support, resistance, support, new high, pullback, runs through the levels. And it's like this because momentum is not strong. When momentum is steep, it doesn't have that cycle rotation. You don't come back and dip into secondary support areas. When momentum is damp, you come back and you get into those secondary support areas. That's what you're looking for. Charts will pull back deeper than you think they are likely to, so just be patient. Taking a look at the NQ, this one went well above our number here, but it did come right into our blog target of 76.14. That's going to be the area that we look for it to break out and above. This one's running very hot at this juncture, but still linear, right? I talked about this curvy linear sort of thing and that bringing pullbacks into the fray um, that are natural in motion. And this one is fairly linear. So we're going to see pullbacks. Look at how thin the volume action is here. Pullbacks very likely to dig deep. So you want to be extremely careful thinking that, hey, listen, I can buy this, I can buy that. Tech is running, semiconductors are running. You have to think about things in terms of risk, and that involves patience. And a lot of us that are intraday traders, patience is not at the top of our virtue list. Not really something that we have a ton of. And so you have to learn to exercise self control. You have to learn to hold yourself back and say, wait a second, I want to get this on the pullback. And hey, listen, if it doesn't get you, guess what? The market's a buffet. It's open every day, and your favorite dish is going to come around the bend soon enough. You just have to play in the wheelhouse that gives you the least risk and the most opportunity for upside. All right? That's what we're looking for there. The YM just is having a devil of a time breaking out. Ethiopian Airlines just came out and said, hey, you know what? We did, the black box shows that they did employ emergency methods that had been put up there for Boeing. Didn't seem to help. That's going to hurt Boeing again. Walgreens looked terrible. They guided down. They had terrible numbers. And this is a weighted index. And so the bigger weights of motion are really pulling this chart down. It's still not breaking out and holding. That could be the warning sign, but it could also be a wait state. Here's the thing. What's the trend? Oh, that'd be bullish. So what do? You wait for it to pull back into the areas that you see resistance, breakout, new high, pull back. So you know that your bounces and your areas to go long are going to be at that support zone. You're going to look at that same thing today. If it doesn't happen, if it breaks, the first thing it's going to do is try to recapture it. If it recaptures it, you're in good shape. If it doesn't, the fade is going to dig deeper. And look at what these fades have done the last time it moved up into this space. It moved up, pulled back, tried it again, failed that retest, and then took a very deep move. Here it did the same thing, pushed up, failed the retest, and pulled way back down. Could we be looking at something like that? We could. We absolutely could. But it could also pop up, hold the level, and move forward, especially if a lot of traders are aggressively short up here and they get squeezed because their pockets aren't deep enough. That's going to be a very interesting thing. Oil is sitting, I'm not even sure how that got up there. Oil is sitting right here at frontline resistance. What did I say yesterday? Hey, listen, this is super bullish. Pullbacks are going to be buy zones. I liked the 6180, 6170 area. It never got there. It came down to like 6204 and bounced again. So now we have price compression. But we have price compression in an upward moving draft. And so this chart, you can't rule out 64. I mean, I'm certainly not going to buy the breakout, but pullback action looks very, very, very good for upside motion. And since it's trending up, we have these formations where we have to say, well, let's take a look at the 4-hour and see what the momentum is looking like up here. Hang on 2 secs. Let's take a peek at that. Yeah, this motion tells us, hey, if I have a topping formation right here, meaning if I break out, it's going to be long, clearly, right, into my next congestion zone. If I don't, then that's a failure to test here. So you're going to look for the chart to come up here and fade. You can initiate the short. You know there are buyers here, so you need to take some profit. But if no buyers showed up and you still had some, you let it rotate into the next support zone. And then after that, we've got legitimately two edges right here at around 60.50 to 60.80. All right, let's take a look at gold. This one, this one's in trouble in my mind. So my thought today is, hey, gold is drifting down. It's got pullbacks all the way to here, but there's still buyers floating around the mix. So you're going to have to wait for the failed retest here. So let's take a look at the 4-hour. 4-hour is going to look quite a bit more bearish. At least that's my estimation as we wait for this to move. Oh, no. All right. So here's what we have going on. This tells me that even if I have a very deep dip, I'm going to find buyers. So this is not a runaway short at this juncture. What it is saying to me is if it gets pushed down very deeply, buyers are going to start coming into the fray. And let's see how far away we have to go for that number. That number looks like, on the 4-hour chart, it might look like 86. That's rounded about the level that I have sitting in the blog, of course, 85, 80, 86. I actually am going to put an alert here. Trigger multiple, and then let's see if it can get to 86.70. All right, so that's what we're looking for the pullback action. Take a look at this motion. It's very range bound, and so it should bounce. Okay, that's it. Good luck trading today. Tomorrow will be fireworks. No video tomorrow. I'll be at the TD Ameritrade site on TD Ameritrade TV tomorrow morning, and I'll not be here.